Markets have been so tough to navigate, but there's been a few areas that have been showing incredible strength, and that is dividend stocks. I'm going to show you some of the best dividend stocks that I can find for the month of May. When markets are tough to navigate, I like to look at data, and one good, cool way to look at markets is through the lens of big money. We're looking at the big money index here, and it is measuring the number of stocks that are getting bought and sold on a given day based on our process. And clearly the big money index is breaking out. So that tells us that there are stocks under the surface of the market that are getting a lot of big money love. Let's look at where those areas are. One reason that the big money index continues to rally higher is because the relentless buying, in energy stocks. They have just been on fire. Commodities are raging. Inflation is raging. This is one area that is making a lot of money. And a lot of these companies are able to spin off cash in the form of dividends. The first stock we're going to be looking at is one of those companies. Remember, none of this is personalized advice of any kind. We're just trying to make you a better investor and showcasing some really cool data. So we saw a bunch of buying in the energy space. So I've listed a few names out here that we can compare one another, right? I want to see how some stocks rank versus others. We've got their MAP score from highest to lowest, and that is a culmination of technicals and fundamentals. Anytime I'm looking for a potential stock, I need to make sure that it has great fundamentals. Let's go to our first pick now. The number one dividend opportunity is Exxon Mobil Corp. This is a huge oil and gas producer. It is a name that has been around for decades, and they continually pay a big dividend. Right now, the dividend yield is 4%. I remember being a young kid, my grandfather, he worked at Exxon. He sat me on his lap and said, "Look, Luke, just invest in Exxon and you'll be okay." Decades later, I think he was right. Let's look at some of this data. You can see that the big money really came to play in this stock. A lot of energy stocks were flying higher. Again, these are the days where money was going into the stock. The shares just kept getting gobbled up. And you can see over here to the right, this blue signal tells us that this is one of the top ranked stocks for that week back in January. Usually that is a sign of further gains to come. Let's look at some of the fundamentals that stick out to me. First of all, we know that energy has been in a rough patch for prior years, so some of that historical data is not going to be that strong. But on a one-year basis, sales growth of 57% is very, very strong for a company of this size. Also, they've got a low or manageable debt to equity ratio of 31%, and the forward PE is 9.4. That is not too crazy in this market. And then off to the right, we can see that the technicals are very solid for this name because it is above its 50, 100, and 200-day moving average. This looks like a solid pick. So where else is the big money flowing? It has been in the consumer staples area. You can see that with the buying over here over the past few weeks. There's been a lot of fears about recession and big downturn in the economy. If that were to happen, you can bet that big money investors are going to be flooding into names that have big cash flows and big histories of paying out big dividends. So here's a handful of staples companies that I was looking at today, and they range from Coca-Cola all the way down to Tilray brands. I never think of Tilray as a staples company, but look, we've got the MAP score here, which has a very big difference in scores. We can see because of technicals, that is the main reason. And the fundamentals are pretty stable across the board. But again, we want to be looking for companies that have a huge history of paying out dividends. So the number two dividend stock on my radar is Altria Group. This is a big cigarette maker, and full disclosure, I own this in my personal account and managed accounts. So this is one of these names that has been paying a dividend for decades and decades. So whenever you're looking for dividend stocks, you want to be looking at stocks that have a huge history of big cash flows to give you a piece of that through a dividend. And remember, the big money index, it's going up. Well, this is one of those stocks that looks to be getting a lot of that big money love. You can see signals here, and here. I've got a huge long-term chart of this stock. I know a lot of people think, oh, this is such a sleeper name. But back in the 90s, this name was a growth stock. I mean, it was a huge name. And you can see that the rest is history. Thing had somewhere to be, that is up. Let's look at some of the fundamentals here. This stock sports a 6.5 forward dividend yield. That is very big in this environment. We can see that they're very stable on the 1-year sales growth. It's about 1%. 3 years sales growth, 2.5%. It's got a profit margin of almost 12%. Forward PE of 11.4. That is very solid, very stable. Not a lot of growth here. We're talking about dividends. Over to the right on technicals, it has green scores across the board. And I think one of the major reasons is because it's trading near its 52-week high. It's going to get a thumbs up for that reason. Some people say follow the news, we say follow the big money, and there has been tremendous buying going on in real estate stocks under the surface. I mean, just on March 29th, we had 32 real estate stocks get bought. That is a huge number. Over the past couple of weeks, that has been a major theme. And a lot of these companies, they spin off big cash, right, in the form of dividends. And I think with this big inflationary scare that's going on, people are rushing to real assets, and REITs can offer that. Data is super cool. And by the way, if you like this type of content, make sure to like and subscribe to our YouTube channel. It really helps us out. So we've got a list of a bunch of REITs, and I own a number of these names, and they go from storage REITs all the way down to office REITs. We can see that the MAP score is relatively elevated for the top half, and then it is pretty weak for the bottom half. We can see technicals are way different for some of these names, and so are the fundamentals. Again, focus on great fundamentals. Who doesn't like some good real estate? Extra Space Storage is the number 3 dividend stock. Full disclosure, I own this in personal and managed accounts. Listen, storage has been a big theme for a lot of adults. And listen, if you don't have a storage unit, you might have to get one because we just keep accumulating so much stuff. As of the end of last year, there were over 2,000 extra space storage units out there. So this company continues to grow and thrive. And you can see that the big money has been all over this name. I mean, these are dozens of big money buy signals just going into the name. They have also increased their dividend a few times recently. So this has just been a great area to invest in recently. And I think with high inflation, you want to look at areas that have real assets. Real estate is one of those areas. It's a high quality name. You can see that with all of these blue signals. I call that the stairway to heaven. Over the long term, great companies tend to get a lot of big money love. And on the fundamental side, it starts to check out too. On a 1-year sales growth rate of 12% is outstanding. Profit margin of 50% is very, very strong. We look at the technicals over here, pretty much good across the board. It's up 12.3% in 1 month. It might be a little extended, but I do think that there is a dividend opportunity with Extra Space Storage. Another strong area of big money support has been the healthcare area. And these are some of these big, large pharmaceutical names that pay huge dividends. I know the market's been worried about recessions. I even filmed a video about some stocks that perform well in recessions. And healthcare tends to be one of the most defensive areas in a troubling environment. So let's round it out with healthcare. If you're looking for dividend growth, I think you want to be focused on the healthcare space. And we've got a lot of names that I'm sure most of you do recognize, like Eli Lilly, Johnson & Johnson. You can see that the MAP score is really strong at the top and really weak at the bottom. And clearly some names are doing well technically, and there are a handful of names doing very well fundamentally. Always focus on fundamentals. The number 4 dividend stock is Johnson & Johnson, one of the most widely known companies literally in the world. It is just a huge biopharmaceutical name. They have lots of products and drugs that they offer. And you know what? They continue to raise their dividend year after year. They just had great earnings. They raised their dividend 6%, and it sports a 2.47 forward yield. Stock has been rather choppy over the year, but recently it has been getting a lot of love as recession fears continue to rage. This is one of those names that whenever you're worried about a recession, they tend to do relatively well because very stable, right? People are still going to need healthcare no matter what the economy does. You look historically, the stock has just been in a very solid uptrend, very strong fundamental buying in the name. Those are the blue signals. You look under the surface, a lot of decent numbers. 1 year sales growth, 13%. The 2-year versus 1-year EPS growth estimate, that is 5.5%. So it's expected to grow its EPS in the next year. Profit margin of 22%, very good. Forward PE of 17.6. That is not that crazy in this market. On the technical side, it's getting a very high score because its last buy signal was on April 19th. So recency does help. And also year to date, it's up 7%. So this is a very solid dividend name. The number 5 dividend stock is AbbVie. This is a big time biopharmaceutical name. And listen, I've owned it for a number of years in personal and managed accounts. They are an old spinout out of Abbott Labs, and they are known for some of the biggest drugs out there. And I'm talking about Humira. So they make big money. And when you make big money, you can pay out big growing dividends, and AbbVie is one of those. The forward yield is 3.62%. Look, year to date, tons and tons of big money has been going into this name. I think because it was one of those big yielding, stable companies. We can see some of these blue signals here. Big, high quality, highly ranked stock. I know that people are worried about the patents, but you know what? The big money is telling me that this stock probably has somewhere to be, and that is higher. Fundamental column has a lot of green. Double-digit 1 and 3-year sales growth rates, 3-year EPS growth 44%. I'm gonna ding it somewhere. It's got a high debt to equity ratio. We look over at the technical column. It's pretty decent across the board. The last buy signal, April 7th, and it also trades near its 52-week high. I know it's had a little bit of a pullback, but it gets a decent grade there. I think that this is a dividend opportunity. So now you see my process of how I go and look for some of the best dividend opportunities out there. If you really enjoy this data, make sure to check out Jason's ETF video. He does a lot of cool data looking at some of the best funds that he sees opportunity for. And also, just remember that you can do some of this process yourself. Just head over to mapsignals.com if you enjoy some of what you see. And always remember, think long-term, don't give up. And that is how you win the game of investing. I'll see you next time.